Buyers in Vallejo, in Fairfield, and all of Solano County. Is now still a good time to buy? I mean, home values are up, interest rates are increasing. Are you going to be overpaying for property? And sellers, have you already missed your shot at commanding the most amount of money possible? Have too many buyers already exited the market because interest rates are too high? Today, I want to walk you through what's happening in our hyper-local market and give you my true opinion on whether I think now is a good time to buy or sell. Let's get started. Hey everyone, welcome back to my channel. I'm Erica Monroe. I'm a realtor in the Bay Area and I specialize in Solano County. If you are a buyer or a potential seller in today's market, I'm sure you've paid close attention to what's happening with home values and interest rates. Well, I say this with a heavy heart, but it is a tough market right now for buyers. And I don't say that to squash anybody's dreams. I just want to be transparent with you. Do I still, however, see opportunity now versus later in the year? Absolutely. And here's why. Home values are still being projected to increase. And on top of that, we're starting to see major increases in interest rates. And in fact, there's a projection for another 6 increases throughout the rest of 2022. My fear is that buyers who are waiting out the market are going to be outpriced. They're going to miss their opportunity to purchase. And of course, it has to make sense for every buyer. I don't want anybody to feel like they're overcompromising or paying way more than a home is worth. But the chance of you purchasing a home now for less money is far greater than if we're looking 6 months ahead. If we go up another percentage point or even 2, that equates to hundreds of dollars more per month that you're borrowing for the same amount of money. So let me give you an example. I sold a home in Vallejo, this really cute, sweet rancher home. It was a 3-bedroom, 1-bath, 1955 build. It was meticulously maintained, but not really updated. That sold for $500,000. This was the very end of 2021. If I were to put that home on market today, I'm confident that the home would command about $530,000 as a purchase price. So that's $30,000 in equity that it's already gained in 4 months' time. On top of that, the interest rate that the new buyer would have would be probably about a percentage higher than what my buyers purchased for. So that equates to a couple $100 more per month. In waiting out the market, if values continue to rise and interest rates continue to rise, my fear is the amount of money you qualify for is actually going to shrink, right? If it costs more money per dollar to borrow, that's more money per month you're paying in interest. So the total amount of money that you can actually borrow may actually shrink when you need it to rise because home values continue to rise. For those folks that are waiting for the bubble to burst or home values to come plummeting down, I'm worried for you that you're going to wait too long and price yourself out of this market. There are no current projections for a drastic decrease in home values or lots of homes to come on market as foreclosures or short sales. Our market and economy is significantly different today than it was in the 2008 crash. I want to point out 3 major differences to you. These are oversimplified for the sake of time, so do your own due diligence, but it should point you in the right direction. So looking at today's market, so many homeowners have incredible amounts of equity in their house due to how quickly home values have risen in the last couple years. A lot of homeowners own more of their home than they owe the bank. So in the event that they could no longer make their mortgage payments and they start going into default, they can likely sell their home on the open market as a regular sale, be able to command enough money to pay off the bank and still have money left over to maybe go rent for a few years. In 2008, most homeowners had very little equity in their houses. They were over-leveraged. Often they owed more on the property than the property was actually worth. Lending practices are much more strict, which is point number 2. It's much harder to qualify for a loan now than it was back then. There's a lot more regulation that lenders have to abide by before they issue a loan. So borrowers today compared to 2008 are likely borrowing less money or money that's well within their means and ability to pay monthly. And the third major difference is inventory. Inventory has been the driving force behind our market. This is historically low rates of homes available for sale, and there's a large amount of demand, a lot of willing and able buyers, a lot of millennials coming of age who are looking to purchase a house. When you have low supply and high demand, of course, that's going to drive up home values. And that's a significant difference in why a lot of economists are projecting for home values to stay steady and continue to rise. So in summary, is now a great time to buy? I'm not going to sit here and say it's the best possible market for you, but I will say based on the projections, it seems like now houses more opportunity for you to get into a home at a lower interest rate, at a lower price point than if you were to wait towards the end of 2022 or into 2023. Sellers in Solano County, is now the time? Should you try to capitalize, list your home for market, or should you wait to see if your home value will continue to appreciate? The projection is that it'll continue to appreciate, but the key is that there's a lot of buyer activity now. A lot of buyers are looking for opportunity. They're looking to get into a home before interest rates continue to rise. There's a likelihood that you will command the most amount of money under the best possible terms now because your buyer pool is greater. As interest rates increase and home values increase towards the end of the year, the buyer pool will likely shrink because unfortunately some buyers will be priced out of the market. Also, with interest rates rising, buyers are going to be capped in how aggressively they can offer on your home. It could be that they can no longer guarantee an appraisal or guarantee an appraisal gap. It could be that they have to be more conservative in the purchase price that they offer you. I unfortunately don't have a crystal ball, so I can't guarantee any of these projections, but based on the patterns that we're seeing, there's incredible opportunity for sellers now. So if you're thinking about downsizing or you plan to move in the next year or so, I would definitely consider having a conversation with your favorite real estate agent. If you have specific questions, you're always welcome to reach out to me. It obviously has to make sense for you, and you have to figure out your next move. The point being, there is incredible opportunity. You will likely command a very nice price point under the best possible terms today.